Welcome to Notepad. I'm your host Ibrahim Sani. This evening we continue our conversation with Jalil Rasheed. Yesterday we've heard them talking about the whole conversation of how they plan to diversify their business and how they want to increase their international investments from 8+% right now to 30% in the next 2 or 3 years up until 2022. Today we shall understand a little bit better about their structure internally. Previously it was announced that they're doing a Focus 4 initiative. And tonight, joining us, Jalil of PNB is going to discuss a little bit more about that Focus 4. Jalil, let's talk about institutionalizing the changes that you guys are planning to do. Let's let's go through the Focus 4 initiatives. Let's start with, of course, diversifying the market briefly, and then we can go into risk management and, of course, institutionalizing the people changes there.
So diversification, as we spoke about, it's about moving away from Malaysia and moving away from equities. Right? When I say moving away, it means not to force sell anything, but slowly reduce the reliance on a single market. And as we discussed, that would involve going to real estate and then different subsegments of real estate, private equity, fixed income, and equity as well. And the target is to get to about 30% by the end of 2022. And also, one thing to note is that at PNB we've got 14 different unit trust funds. So we don't have one master fund. Each of the 14 funds have different guidelines, different requirements, and different asset allocation. So it's quite complex that way. When you put it all together, we would like to see 30% overseas. That's how we've worked it. And this would mean that certain funds within the 14 would have a different element of overseas investment. Also depending on size, right? If you're smaller, it's easier to go overseas much quicker. If you're larger, it takes a bit of time, right? But the overarching idea is that we want a higher element of recurring income coming from these funds and a reduced dependence on the volatility of markets. So we would like a nice income coming in from our real estate investments, a nice maturity from our private equity, a nice buffer from fixed income, and some dividend income coming from equities as well. Then the remainder we would bridge with capital appreciation coming from the equities. That's on the diversification side. Then on the second one is the value creation. Value creation is that we are owners or major shareholders of some of the biggest companies on the index, right? And then we took a step back and asked ourselves, what moves the index, right? What moves KLCI? And it's a function of who's in the index, right? When you look at the KLCI index, it's not represented by all the 900 companies listed. It's probably the top 50, top 60 companies, right? And then the bigger the company moves, the bigger the impact to KLCI, right? That's what we say, moving the needle most. And then when we looked at it, we do have a number of sizable companies in the index. And there are a lot of opportunities for us to make those companies better, either when it comes to the way they're organizationally structured, or maybe spinning off some of the businesses, or getting rid maybe some of the businesses that don't make sense anymore, doing a variety of things. And that's where we want to play a much more active role. So I said, I used the word we will play a much more active role at the boardroom level, right? And that's very important from a demarcation of roles perspective. But we want to be engaging them more, and we want to be telling them and challenging them on this.
Would you consider that to be part of the idea of becoming, a little bit of an activist investor outright?
Yeah, I think we want to be we're a lot more vocal these days, right? We write letters to the company, telling them, maybe you should be doing, these are our opinion of how things are done. And I think we've always done that. But I think, to your point, it's about institutionalizing that best practice, right?
Which is, of course, another element of Focus 4 as well.
Exactly. So it's about institutionalizing everything, because, the knowledge shouldn't just reside with me and the team. If we are no longer there, as a firm, it needs to go on and function. So it's about institutionalizing best practice. So what we have said is that, we're going to write an annual shareholder letter. As a good discipline. We will publish an annual stewardship report where we would compile all the AGMs that we have attended, what are the engagements we have done with all our investee companies. And this goes beyond the strategic companies. It even goes to the core and some of the trading companies. But we want that to be like a document that we publish every year. We also came up with a stewardship framework, which is to make very clear what is our expectation as shareholders. Right? One thing we've done is reducing the tenure of directors from previously 9 years to 6 years. And there's a reason we did this. One of which is that when we did research, we found that, in a lot of countries where boards were most effective, the average tenure was about 5 to 6 years. So we decided to cap it at 6 years with a view to having these directors move on to other companies that would require their skill. Right? And now we have also worked with the companies to map out the board of directors and to see what are the skill gaps that are required. I think we have to move away from this traditional mindset that every board requires 3 lawyers, 3 accountants, and others. Right? And I think that mindset needs to go. Although it is important to have those skills, we need to think about where these companies are going. Right? Is there a need for us to have a digital guy on the board? Is there a need for us to have a risk management guy on the board, right? So we have mapped out what are the skill sets that are required. And now we are building a directors database to fill that gap. The other thing was to also reduce the number of boards that directors should be sitting on. In the past, we didn't have a limit. Now we capped it at 3 public listed companies. Reason is it's a very onerous responsibility being on a board, right? One is you've got your responsibility as a board member. Secondly, you've got various committees that you may be part of. Then if you are somewhat of an international company or regional company, you may also sit on the board of the country subsidiaries. So, and that's just one company.
Yeah, of course.
And you multiply that, and it's almost a full-time job. And the job as a director is meant for you to take a step back and think about the strategic aspect of the business, right? And where are you challenging and doing that check and balance? So that's why we've reduced that. Again, the reduction in years and number of directorships was meant to ensure quality. Now the next question is, how do you ensure continuity? Right, more people coming on to the board, to the boardrooms, and newer talents, newer names, right? And that's where we want to play a role to kind of refresh that talent base. Bring newer people into the system, who were not previously board members, to give them exposure to the boards and everything. And that's an ongoing process, and it will take a few years for that to happen, right? So we want to refresh that and move people around. The other one is proxy voting guidelines as well. Now we make it very clear that for every company that we own, whether it's a major shareholder or minor shareholder, we're going to vote. We're going to vote, and we have certain rules on it. Like we are going to vote against things like blanket issuance of shares, right? Companies cannot go to AGM and say, give me an authority for me to issue shares up to whatever amount. We said no. If you want to do that, call an EGM. We need to know justification. We can't give you a blank check to do anything you want. So we have made it very clear what are things that we will be supportive of, and what are things that we can discuss, and what are things that are absolute no-no. We've made that now very
Would you
clear.
consider what you're doing now a little bit different from what has been done at PNB before this?
Absolutely different. Absolutely different. I think
So PNB has been writing blank checks to investee companies?
No, not really. I think not really.
But is it something different? So
different in the sense of the institutionalization, making very clear the communication between us and the investee company, and just making sure upfront, hey guys, I'm the major shareholder, and this is my expectation of you.
Some of the things that you said, including limiting board membership of 3 companies, whatever, the same can be said about your nominees, PNB nominees in these investee companies. What's the story there? Are you guys spread thin, or there's a certain amount of people looking at a certain amount of industries and companies?
No, I think again, when we look at board, we have a different viewpoint that, we're not looking at industry expertise, we're looking at the expertise that particular individual brings, right? So, must an oil and gas company have 80% of the board members in oil and gas? No. I think we need to have several people who understand the industry, but we also need several people to ask very basic questions, right? Very basic risk questions and everything. So we're looking at it from an individual, what he can bring to the board, and not, industries, they're learnable. We can learn. And the last thing you want is to stuff a board full of industry people, because otherwise you're all talking the same lingo, and we don't want that.
There's an echo chamber.
Yeah, exactly. So we want to encourage differentiation. But the board talent, I think this has been quite documented, is that there should be a newer breed of people coming on, and that's what we're trying to do, building a database and seeing where we can match. But we need to make sure that we are assigning the right skills to the right board, and that's why we work with our investing companies and say, tell us what is the skill set on the board that you would really, really like.
You have 14 funds. The regular Malaysian would be pressed to name even more than one, right? Lucky if they can name 2 or 3 even. But there is one fund that the whole country knows, which is ASB. And last year, it recorded its lowest ever on record. What is the expectations of people like me that is quite invested, actually, in ASB? What would be the message that you have for people like me when we look at investment, fixed income at least, or FD nature? Shall we brace for the worst for ASB?
So when ASB was formed, the whole idea was that it was meant to give a return higher than fixed deposit. Right? That was always the aim. It's been in the prospectus for a long time. But over the years, when PNB was formed in the late 70s, it was a different ballgame altogether, because the Malaysian stock market was trading more than the New York Stock Exchange, right? So investing in just one market would give you double-digit returns.
Yes.
So the expectation from an early days were double digits, then obviously it went down, and it's been on a downward trend, right? So from a messaging point this year as well, last year we did take a very difficult decision to declare, at least on a per unit, a lower distribution. The message that we have put out is that returns have to be realistic with how market behaves, right? So if the whole world is going through this slump as we are in right now, there is a need for us to kind of take a step back and expect perhaps a lower return, right? The amount, I can't tell. Things can change very drastically between now and end of the year, right? But the commitment has always been that we will pay higher than the fixed deposit. And that's how we have always been structured, which means that a few things, we can't take unnecessary risk in order to kind of pay a lot more. And then there is...
In your process of trying to meet that internal goal of making it above FD rates, assuming that income is terrible this year, does it mean that you're going to dip into your reserves?
Well, every fund that we have has a reserve, right? So on years that we do very well, we don't pay out everything, right? We keep the reserve, and the reserve is unique to each fund. It cannot be transferred to any other funds, right? So yes, we do dip into reserves, but reserves, as the name suggests, is when things are, when we really need it. So there needs to be a discipline, right?
Is this year?
It could be. We have to see towards the end of the year. It could be towards the end of the year. We will see that. So we don't make that reserve decision this early on in the year.
Would you announce that kind of decision if you dip into your reserves? Do you announce it to the public? Or do you have a duty to announce to the public?
Well, it's part of the fund, right? It's part of the fund. So we're not dipping the reserve from anything else. It's part of the fund that has been built over the years. Yeah.
Okay, we'll take a short break. When we come back, we'll conclude our conversation with Jalil Rasheed of PNB. Don't go anywhere. Thanks for staying on. You're watching Notepad. I am with Jalil Rasheed of PNB. So, Jalil, being a young guy in a very astute institution, I wouldn't want to use the word old, but let's just call it astute. How have things been in terms of you settling down in that organization?
I've enjoyed it. I've really enjoyed it. It's been about 7 months now. Not like I'm counting. But I've enjoyed it. It's been really challenging. And the good thing is that it is so vast that it's always intellectually very challenging, which I enjoy. One day I'm dealing with building a development, the other day, dealing with investee companies, and then thinking about asset allocation, then thinking about people and talent. So I've enjoyed it.
Putting on a hard hat and yellow vest and visiting highways, it's something that's on your Instagram as well.
Yes, exactly. Yeah, I enjoy getting down to the ground.
So does that mean that you yourself have to change how you work? Because previously, I mean, we all know your background, fund manager all through and through, but slightly different these days, right?
Well, I've always done site visits as a fund manager. I've always enjoyed that, right? But it's a different dimension now because it's such a big institution. It's not just purely thinking about investments. You know, we own companies. We need to think about how to steward those companies. You know, there's a social agenda. You're right. We spend a lot of money on education and all that sort of thing. So there was a need to learn new things, right? But, you know, that's part and parcel of any job, right?
So two things I want to touch base with you on. Number one is on the social agenda.
Yeah.
Bumiputeraship is a big thing. It's also, you know, tricky to balance the needs and wants of the society. How do you tell people, particularly those that do not have any inkling whatsoever in terms of investment, the regular folk out there, the rakyat, that is, you know, they only know PNB just being that ASB company, for instance.
Yeah.
How do you reach out to this group of people?
Yeah, so our that financial literacy work is done through Amanah Saham, which is wholly owned by PNB. So we do financial literacy work every single day of the year, obviously before MCO kicked in.
Yeah.
Every single day of the year, including Hari Raya Day, there is a financial literacy course happening somewhere in the country, right? Probably in Sabah, Sarawak, or somewhere. When I came in, we had a look at that and say, how are we measuring the success, right? And I'm big on that, right? Everything that we do, I want to know why we're doing it. There needs to be an objective, there needs to be a plan, and there needs to be an outcome. Tell me how you're going to measure the success. So at the end of the day, we know whether this was successful or not. We're not doing it just for the sake of doing. So one thing that we did, a flagship event, was Minggu Amanah Saham. That we did, was one big event that we would do over a week in one location around the country. We've done it for 20 years, and this year we decided to call it off. We even called it off just even before COVID, right?
Why?
We did that because I think there needs to be a new way we reach out to the society. Having one event and getting 100,000 people into one venue may not be. Do we know how we have changed people's financial literacy? Maybe not. So we're going to try something new this year where we're going to go and use more digital. One thing that we have is an incredible amount of data about, we've got 14 million unit holders. Of that is about 10.5 million are ASB unit holders. We know the demographic, which town, which state, and how much money they have invested. It's incredible data, right? And when we broke it down, we're now going to use that data to say that, hey, there is this particular state with a very young demographic, but they're not investing a lot. Why is that? And maybe we can channel our resources there a lot more, right? Rather than just having one event and hoping everyone will come there. And then we say, job done, right? But now we're doing it in a much more pointed way to say that, okay, there is this area where I think there's a lot of money, but, they're not reflected in our unit holders. So we're going to spend a bit more time using data and doing that sort of thing. And doing things digitally will also give us a footprint to know about, who's downloading stuff and everything. And we want to put a lot more content on digital as well. Right?
So for instance, just to use an example, you can now withdraw using my ASNB app, $500 a day. How's that coming along, for instance?
Well, it's $500 a month.
Oh, $500 a month.
Yeah, $500 a month or 3 transactions, anything, whichever comes first. We did that to facilitate, right? It was a natural step that we wanted to do, that we allowed subscriptions on the app. And we should also allow the same in terms of redemption, right? That's been good. We have people using it, but we have 14 million unit holders, but only 1.6 million of that are actually are on the app, right? So we still need to get more people on into the online game.
Right. So there's 2 questions I want to ask you. The first was that. The second one is, of course, CSR. You've been spending a lot in terms of COVID-19, all the other CSR work that you guys are doing. what is the decision behind spending so much in terms of CSR, considering that this year might be linear for you guys?
So CSR has always been something we've always done, right? So there's few things that we spend money, and we're very clear about what is our social, corporate social responsibility. One is education. We sponsor students, and then the other one is healthcare. Has always been a big thing. The other one is community empowerment, and this means helping poor people and everything. And that has always been the case. Healthcare, even before COVID started, we have always been buying medical equipment for hospitals, where we have gone to government hospitals and asked them, are there any equipments that you need that we can pay? And this comes from various funds, right? These are CSR money that is reserved, that has always been reserved for us to use. It's also the zakat money that we have kept aside. So we decided that perhaps this is a year where more of the money is much more beneficial to go towards healthcare because of the situation we're in, right? And that's why it's going. So we've not increased our allocation more than what we would. It's just redirecting the pot towards more going into healthcare this year. Then on the education, as you know, we sponsor students overseas. They come back and serve PNB. But that's the part of the education program that people know. The one that people don't know is that we also sponsor a lot of students in MRSM, right? We take students after UPSR who have done very well, and they are asnaf, right? They are very poor kids. They come from families with, where the parents have a lot of children, and we sponsor them in MRSM all the way up to Form 5, and if they do well, they can apply for our scholarship program. Then we also have a local scholarship program, where we sponsor students in local private universities. So, we're a big believer that education is that empowering tool for you to get a better life, right? And it will change you substantially. So, that's why for us is education and healthcare. If you got the education, you got a bit of a leg up in society. And then healthcare as well, to keep yourself healthy. And that's the two main things that we want to do, right? We need to do things that are impactful and not one-off. That, we can look back and say that kid's life is much better because we gave an opportunity,
of course,
for him to pursue an education. Yeah.
Right. I saved that, I guess, the trickiest question for last. Unlike EPF, where there's a mandatory contribution every month that comes from all the workers. PNB doesn't have that.
Yeah.
And it's all elective. See, you're already bracing for the question, but this is for my audience,
Yeah.
right? Okay. If people don't know, for the funds that you have, ASB and the other 13 funds, under PNB, the contribution is number one, elective and voluntary. Number two, it's highly liquid. I can take my money out anytime I want.
Yeah.
Now $500 a month, as you say. But of course, I can take the entire chunk out if I wanted to tomorrow. Just visit any branch. How do you manage this highly volatile pot of cash moving forward?
Yeah.
And by the way, people need cash now. It's not
Yeah.
because they don't like PNB.
Yeah, exactly.
I just need cash to pay for my whatever.
Yeah. So we looked at the redemption amount, and typically our redemption is always highest in January, right? Because we announce our dividends, ASB dividends in December. We close the fund for about 2 weeks for the closing, and then it gets reopened in the first few days of January. And January and February is always our highest redemption months, traditionally, because people have a few hundred more in their account, they're taking it out, and they're spending it for household expenses. So this year, when we looked at the number, it's actually on par with last year, all right, the redemption.
Despite COVID, despite MCO.
Despite. But where there's a difference is that the money coming back in. So subscription and redemption, right, two different things. Redemption is the money that people take out. Subscription is what they put in. Then you look at what the net is.
Yeah.
So the net is lower this year. And because the redemption, if you put it 2019 and this time, year to date, 2019 and 2020, is almost the same, almost on par. But where the subscription is where it's lesser. So this clearly suggests, and given the situation, is that people are withdrawing and using it for expenses and not reinvesting it back, right? So that's the situation there. And then in terms of liquidity, we are unique in that way because we are a fixed price fund. right? A lot of unit trusts are variable price funds.
Of course.
But
you do have variable priced
we do have variable
funds.
price funds. But on our fixed price funds, it's on the spot redemption, right? So we are a unit trust company, but we behave a bit like a bank where you can go to a branch and redeem on spot. So the liquidity, asset liability management is absolutely crucial. One of the first things I did when I joined was to establish a treasury desk, right? Our treasury function was done through various departments, but there was a need for us to set up a dedicated desk so that it has a holistic view of what the liquidity requirements are, right? So we've established that team now that's looking at what is the optimal liquidity that we need for each fund as the group, what are the sort of financing that we need to do when we say we invest in a property or real estate and everything. What do we need to do? So a lot of things have changed there. It's also the way we look at...
So I'm just taken aback. Before this, there was no treasury desk in PNB.
There was a treasury function, but it was sitting within the finance team.
Right, now it's a dedicated desk.
Now it's a dedicated desk, correct.
Yeah.
We've taken it out from finance and put it as a treasurer, and we brought in specialist treasury skills, right?
So to put the mind at ease of Malaysians out there, are your liquidity levels okay?
More than enough.
More than enough.
Yeah, it's robust.
To weather this very, very terrible storm that we're going through.
That we are very confident about, right?
Is there an opportunity or a time and place for you to introduce FDs in a way? You put this money, lock it in, and we'll give you a certain amount of returns assured. Just don't take your money out, and you can't.
So we need to distinguish ourselves that we are not a bank, right? And I think that's a very, because of fixed price fund, that's sometimes the definition is so grey that people
don't know.
Or don't know. And we have to be very clear that we are not a bank, right? That we are a unit trust company. And then those sort of FDs need to reside with the banks, right? So there needs to be a clear difference into how we do things.
There has to be some risk as well in terms of bank runs. Well, I guess the amount of people coming in and redeem at a lot of money, a lot of people coming in at the same time. Is that something that you're factoring in?
We factored that in. We have a base case, worst case scenario, and everything. And I always say we have to always be prepared for the worst, right? So when we do that analysis, we're always preparing that. We're always prepared in a situation that that the worst can happen, right? And that's just the risk management instinct that goes in. To be fair, the situation is fluid, right? We don't know how it's going to be, and I'm not going to kid and lie and say I know exactly how much redemption is going to be. I don't know, right?
Yeah.
Because if the economy turns in the next 3 months, and then maybe it's not too pronounced. But then if it stretches on and people really, really need to dip into savings, then yes, it could be a lot more pronounced, right? Which is why I said everything that we do, sometimes people always ask, why aren't you investing in much more higher risky stuff and everything? And we always need to take a step back and ask ourselves, is it worth the risk? Because at the end of the day, we want to deliver a higher than FD return. At the same time, we need to think about the liquidity that we need to manage and maintain. And at the same time, we cannot take unnecessary risks because we can't afford to take a punt and say, let's try it out. If we lose, we lose. We can't do that, right? Which is why we don't do early stage investment. We need to do something a bit more mature and everything. So although our universe is big, when you put the risk management guidelines in there, it does kind of whittle it down. But I'm happy with that because at the end of the day, I'm much more at ease of where the money is. And then there is some sort of visibility in what I'm getting rather than spending sleepless nights thinking about whether the money is lost, right? Yeah.
Fantastic. Again, thanks very much for coming over in this makeshift studio of ours, at least during the MCO period. That was my conversation with Jalil Rasheed of PNB. If you've missed any part of this interview, just head on to astroawani.com, look for Notepad over there. There's plenty of interviews like this that can be found there. You can also watch these kind of interviews on your mobile devices. Just download the Astro AWANI app wherever you get the application. Until next time, thanks very much for watching and goodbye.